JJ the CPA here. Hope you're doing well. Hey, thanks for tuning in. Wanted to give you a quick update on a couple of key things. Yesterday, the U.S. Senate introduced what is now being called the HEALS Act. So it is Senate proposed. Today is July 28th. The purpose of this video is to tell you what you need to do to get prepared for when the HEALS Act becomes law. What's key here to know, which you could already guess, is that by the time it becomes law, there's going to potentially be changes to this, provisions. It might be tighter, looser. There could be some different qualifications, additional qualifications, or none of this. However, I have been, in essence, predicting that this would be the qualifications for PPP 2.0. And what is in the HEALS Act is that if you already got PPP, this would allow you to get more PPP, Paycheck Protection Program. So it would be literally a second round, not just more money into the PPP program. It would be more money to you and your business if you qualified. For the self-employed, what I've seen is that you could also qualify, but here are the huge differences between PPP 2.0 and 1.0, meaning if you're going to get more. And this does, as I would see it, also apply to the self-employed as well as the employers, which is this. There's going to be a comparison, as I've been predicting, of your gross revenues during a specific period of time in 2020 compared to a prior period. Based on the proposed HEALS Act, the gross revenue decrease, would be comparing second quarter 2020 to 2019. So let's get prepared for that. It would also then require a 50% decrease in gross revenues. Notice the question mark. And you would have less than 300 employees. This would include the self-employed as we know it now, all proposed. And it seems as though you would be going to the same bank. So if you weren't happy with your bank, I'll start from the bottom to the top, then who else can be doing PPP? No bank's going to respond to you right now if they're doing PPP 2.0. It doesn't exist. But if you were happy with your bank, maybe you email them just to say, hey, just giving you heads up that if I qualify for PPP 2.0, I would like to use you again. Just give them a heads up, saying hi. If you don't have that relationship, then do something similar. If you can't, then you can't. Now, on the 50% decrease in revenues, because you're going to either know if you have less than 300 employees or not, but on the 50% decrease in revenues, 2020 versus 2019 second quarter, that would be April, May, and June, which is the heart of when all this happened. A couple of things that you're going to need is you're going to need your income statement for 2019. You're also going to need it for first and second quarter 2020. Now let's just get real. It's not possible just to create a second quarter income statement without having a first quarter income statement. And then you are going to need 2019 income statement, but most notably, you are going to want to be able to segregate out second quarter 2019 and second quarter 2020 to be able to do the comparison. Why even look at it now? Well, to see if you're even in the realm of qualifying. So do the comparison. If there's a 50% decrease, then you look as though you could qualify. This is all still proposed. The other reason to be aware of that is so that if you don't have these things, that you can get them. If you have someone that's doing them, get it from them. If you think they have everything, why don't you email and verify? Hey, do you have everything? There's no reason to wait to produce these. Go ahead and produce them. What I would recommend and what I'm doing with my clients is we're going to produce an income statement that is January 2019 through June 30th, 2020, and it'll be month by month. because there could be some other caveats in here. It could be a monthly average. It could be a number of other things. So we know this, it's going to be based on gross revenue and a decrease in it. This is all very similar to the employee retention credit. So get that ready and then do a comparison. As it relates to the decrease in revenue, make sure that what's in your revenue is actually revenue. Make sure that you did not include PPP 1.0 in your revenue. Make sure whoever's doing your books didn't include it in revenue. How would you know that? Well, if you're looking at your financials and you're looking at a month by month, and you see in 1 month that it's 50,000 higher or 100,000 higher or 200,000 higher than normal, especially compared to the prior year, take a look. Where? General ledger. If you're still unsure, go to your bank statement, look at when that amount was deposited, and then look and see if it was included in income in that month. Or ask, solve it. The reason this is key is that if you have stuff, if you have numbers in your gross revenue that isn't gross revenue, it's going to mess with your numbers, obviously. So get in touch with your numbers, and it is based on the proposed, the same calculation as before, which is your payroll for 2019 divided by 12 times 2.5. So if you got 1.0, you should already have all of that documentation, but get your hands back on it. So again, all proposed. This here is to get you ready. So even if the decrease changes from 50% to something else, even if the time period were somehow to change, you need to still have this information ready to go. You can be doing some initial looks. Make sure you have it in hand. All right, hey, I'd love it if you'd subscribe. If you're not a subscriber, what are you waiting for? Hit the button. And then if you are, you might turn on the notifications as this thing progresses and as this becomes law. I'll have a series of other videos coming out to help you get PPP 2.0 if you qualify. All right, hey, have a great day and thanks for tuning in.